The robots are coming. As an investor, are you ready? Coming up, we'll tell you about 14 stocks of companies tied to the fast-growing robotics industry, and we'll tell you which ones Wall Street likes the most. So let's get started. This is Ticker Take. Hey, Caroline. Hey, Caroline.
Hello, John. You look so handsome today.
Thank you, Robot Caroline. Were you programmed to say that?
Of course not, John. You just look so handsome.
Not sure I believe that, but believe this. The robot era has arrived.
Indeed, from Amazon's warehouses full of robots to Tesla's Optimus adventure.
And so growth investors are getting ready. In fact, UBS has already predicted that in 25 years, by 2050, there could be 300 million humanoid robots.
Meanwhile, Morgan Stanley put out its own report that said that number could be closer to 1 billion robots and a market that could be close to $5 trillion.
So today we're going to walk you through 14 stocks at the center of this story. These are companies that are transforming all sorts of industries.
And we'll tell you what their growth is expected to be and how they're expected to perform.
All right, should we get to it?
Let's do it. But first,
this is not financial advice.
In alphabetical order, stock number 1, AeroVironment.
Well, you know when you watch those Terminator movies and there's robots on the battlefield? We're not quite there yet. But there is very much a place for this company in the defense industry. So they make drones, they make remote-controlled ground vehicles, very popular with militaries and governments. They have already moved into their fiscal 2026 year. So if you're trying to project 5-year growth with this company, and there aren't too many analysts that are making those projections, if you look at the performance from last year over the next 5 years, on average, those analysts would not be surprised to see 330% revenue growth and income growth of about 370%. Again, not a huge pool of analysts that are projecting out, but all of the analysts on Wall Street like this stock. It is recommended as a buy by the entire street. Stock has already had a nice run, but the average 12-month target price is $400, so these analysts on average would not be surprised to see about 20% more upside.
Stock number 2, Apple.
Well, a reminder, this list is in alphabetical order, not in order of importance. That's not to say that Apple won't become a big player in robotics, but today we just don't know enough about what they're going to do. But wouldn't it be cool if Apple became one of the dominant names in the robot industry? And the research team at Morgan Stanley has already tried to project out what that could look like. In fact, they have estimates that suggest if Apple gets this right, in 15 years' time, a robotics unit for Apple could be worth $130 billion in annual revenue. That is massive. Now, remember, with the company, they've been quiet on their robotics plans for now, which means that the analysts who are projecting out, let's say over the next 5 years, really can only go with what we know about Apple today and the products and services that they offer today. Looking out 5 years, Wall Street on average would not be surprised to see this company generating more than $500 billion in revenue. It's a mind-blowing figure, but again, the law of large numbers. Apple is already big, and so that means that that growth would be a respectable, call it 20% for the top line. Now, when it comes to the stock, it has done relatively well recently, which means that most of the analysts aren't expecting we'll see a notable rise in the shares over the next 12 months. But 60% of the analysts are still generally constructive on Apple's stock. And by the way, if we're watching Apple, also keep an eye on Samsung because they have their own robotics dreams.
Stock number 3, Cognex.
Okay, this company doesn't make robots. What they do make are vision systems for machines. And if you think about robots, they need to know where they're going. They need to know what they are inspecting. So what does Wall Street think of this company? This is the tricky part. There aren't a lot of analysts who are projecting out as far as 5 years. So we're going to go off one analyst estimate from TD Cowen. That research firm would not be surprised to see revenue growth of about 40% and profit growth that more than doubles that amount. That'd be very respectable. As for the broader story of the stock today, it is supported by about 60% of the analysts who cover it. They think fair value for the shares is around $48.
Stock number 4, Deere Co.
Well, Deere has come up on Ticker Tape before. We talked about the company in the context of space stocks because increasingly the company is focused on satellite communication, GPS technology. Well, this is also a company you have to talk about within robotics because if we're going to talk about robots on the factory floor, what about robots on farmland? Whether it's autonomous vehicles helping with planting seeds or harvesting crops, that is very much where Deere is headed. Now, the other thing is Wall Street is not in love with the stock. A majority of analysts do recommend Deere shares, but on average, they're not expecting huge growth for the stock over the next 12 months, give or take 10% upside. What is amazing, though, is here's a company that is 188 years old, and over the next 5 years, revenue is projected to grow more than 75%, and profit is expected to grow by more than 100%.
Stock number 5, Fanuc.
This is a Japanese company, well known in the industrial robots industry. Actually, they're well known for their yellow robots that are used in manufacturing, everything from cars to electronics. Their revenue is expected to grow in the neighborhood of 34% over the next 5 years. Gross profit expected to increase by 60%. It's liked by 2/3 of the analysts who cover it. It mainly trades in Japan, but you can also buy it in the United States.
Stock number 6, Hyundai.
Well, look, we're going to be talking about a lot of companies today, so we just wanted to speed things up in the auto sector because it should be said that there are other auto companies, Honda, Toyota, that are interested in robotics. We're going to talk about Tesla as well, but we wanted to single out Hyundai because they acquired Boston Dynamics back in 2021. This is one of the coolest robotics companies. You probably know their YouTube videos with robots flipping and doing all sorts of fun stuff. And that was a message to the market that they're interested in how robotics will play a role in factories, but also potentially with consumer applications. The issue is it's still early. So most of the analysts are only projecting out how the traditional car business will do over the next 5 years. And when you look at the projections for revenue growth, it's in the neighborhood of 20%. What about the stock, which largely trades in South Korea? It's had a pretty good run so far this year, but it is overwhelmingly liked by the analysts who cover it. More than 95% of the street has a buy rating on Hyundai shares.
Stock number 7, Intuitive Surgical.
Well, it's possible you've heard of this company. They are known for surgical robots. They are highly respected in the medical field. They've got a strong install base. There are some pretty high barriers to entry to getting into this area where they do really cool stuff. I mean, they're known for less invasive surgeries. So as a result, they've got great recurring revenue and runway for growth. Now, this stock has had an incredible run. Over the last 15 years, it's outperformed like Costco, Monster Beverage. But because of the projected growth, roughly 2/3 of the analysts who cover the company still love it. And they are expected over the next 5 years to see upwards of 90% revenue growth and more than 100% profit growth. And on average, analysts would not be surprised to see the stock higher in a year's time than where it is today.
Stock number 8, Nvidia.
I know we've talked a lot about Nvidia, but it is hard to do a segment on technology that is transforming the future without including Nvidia. And the other reason we're including Nvidia is if you invest in a robotics-based ETF, don't be surprised if Nvidia is in there. They don't make robots, but they help to power them. So their chips, their computing platforms are helping to enable AI machines, which means they're kind of like the computational brain behind robots. And the stock's had this huge run for the record books, but it's still liked by 90% of the street, largely because of the growth expectations. Over the next 5 years, on average, Wall Street expects revenue growth of about 100% for Nvidia, and they're expecting profit growth of more than 120%.
Stock number 9, Rockwell Automation.
Okay, these guys don't make robots. If Nvidia is the brain of the robots, you might think of Rockwell as the nervous system. They make these systems for managing robotics, which is important if you're trying to make sure that all the robots in your manufacturing process, all the logistics around that is running smoothly. Now, when you look at the stock, which has had a reasonable run, it's actually trading above the average 12-month target price from the analysts who cover it. But analysts overall still do like the company, which, by the way, is not a young company. They've been around for a very long time. So more of a mature business. Their revenue over the next 5 years is expected to grow by about 20%. Wall Street would not be surprised if net income were to grow by about 30%.
Stock number 10, SoftBank.
We don't talk a lot about SoftBank, but we definitely should. And we certainly should in the context of robotics. And here's why. This is the company, a holding company, run by the billionaire entrepreneur Masa Son. And Masa's fortune is based on his willingness to bet on the future. Not all those bets have worked out. But here is somebody who saw the opportunity in Yahoo, in Alibaba, in Nvidia before most of the world did. He convinced Steve Jobs to give him the iPhone rights in Japan before anybody even was thinking about the iPhone's influence on the world. And he's also been thinking about robotics for a long time. And it hasn't always worked out for SoftBank. We talked earlier about Boston Dynamics, which is now owned by Hyundai. Well, SoftBank used to own that business, didn't really work out under their ownership. They've tried their hand with consumer robots, Pepper. Again, didn't really work out. Maybe they were too early, but they recently made another interesting acquisition. This is of the robotics arm from the Swedish engineering firm ABB. And that business is very well known when it comes to industrial robots. They've done deployments all over the world. They've had a lot of success with that. And so now you've got SoftBank, which has already been investing aggressively in AI with a proven robotics business. And whether you invest or not, you've got to watch this story to see what SoftBank can potentially pull off. Now, in terms of investing in SoftBank, you got to understand the stock has already had a tremendous run. It mainly trades in Japan. And so when you look at the 12-month target prices from the analysts who cover it, it's a lot closer to those levels, if not in some cases exceeding those levels. But on average, analysts still really like SoftBank's stock.
Stock number 11, Symbotic.
Okay, this company focuses on making warehouse robots and smart software that helps to automate packing and delivery. One of the standout parts of this story is that Walmart really likes them. They're working together to bring interesting systems to all sorts of Walmart stores. The stock has had an incredible run, and only about a third of the analysts are actually recommending it right now. But when you do look at the projections out, this helps to explain the stock story. On average, the street is looking for about 150% revenue growth from the company over the next 5 years, and they're basically going to be going from, if the analysts are right, losing money to generating more than $1 billion in profit every year. So definitely there is some growth ahead for this company, according to Wall Street, and then it ends up being a pure play on automating the supply chain. So it's going to be a story to watch.
Stock number 12, Teradyne.
Okay, this is a company that basically started out in semiconductor equipment testing, but they have a large robotics business, which includes what are often called cobots, collaborative robots. Think of like a robotic arm that is working next to a human to help with like repetitive tasks. There have been some reports about working closely with Amazon. We'll wait for more details on that. I guess the caveat would be there is growing competition in this industry, and you've got in the stock a name that has had a huge run. So on average, it's trading above the 12-month target price amongst the analysts who cover it, even though about 2/3 of the analysts do like Teradyne. Now, when you're trying to project out what kind of revenue and profit stories we could see from this company over the next 5 years, I have to say it's a small group of analysts in the neighborhood of 4 that are willing to do that. And when you average out their expectations, they wouldn't be surprised to see 80% revenue growth, 280% profit growth over that period of time. And you would have to assume some of the recent stock run-up comes from those growth expectations.
Stock number 13, Tesla.
All right, we have talked a lot about Tesla's humanoid robot Optimus. Elon Musk was talking about it again recently at Tesla's shareholder meeting. There is a growing expectation that we could potentially see it on the market in 2026. I think the bigger story with Tesla is if you are bullish on the robotics industry, the humanoid robot opportunity, you should probably be watching this company as much as any other, because you have to ask the question, would the electric vehicle industry be where it is today without what we already saw from Tesla? Would the space economy be today without what we've seen from SpaceX? So whether you're a believer in the Tesla story or not, it's going to be getting a lot of the attention on robots over the next decade. So again, we have to watch it. Now, in terms of what kind of robot business Tesla could have, the analyst team at Bloomberg recently did some projections, and they estimate that in 10 years' time, so 2035, they would not be surprised if more than a quarter of Tesla's profits were to come from humanoid robots. We should add that over the long term, Elon Musk has already talked about 80% of the company's values coming from robots. So we're going to have to watch closely, but for now, it's still hard to factor all of this into models. So over the next 5 years, on average on Wall Street, analysts are expecting 130% revenue growth from Tesla. Again, that doesn't really factor in the robot story. It's a lot more around vehicles, energy storage, and over the next 5 years, on average, analysts are expecting profit growth of about 400%. Again, that largely leaves out the robotics business.
And stock number 14, UBTech.
Yeah, this is a Chinese company. Now, compared to Tesla with the Optimus robot, which we mentioned is still in development, or compared to, say, XPeng, another Chinese company, an electric vehicle maker, which has been getting some robot attention, here is a company with real-world deployments. They've got humanoid robots that have been sold to, yes, businesses, but also consumers. Different use cases, education, as an example. Stock's had a pretty good run. It is still liked by about 90% of the analysts who cover it, largely trades in Hong Kong. Now, when you look out for this company, there is a view that they could still see their shares rally about 15% over the next year or so. The challenge is projecting how much the business will grow. There's a very small group of analysts that are projecting out about 5 years, about 2 or so. When you look at their expectations for revenue growth, it could be substantial. They're averaging out to around 500% revenue growth. Again, that's a small group of analysts, so that's the caveat. But if that were to be the case, you could see this company go from being an unprofitable one to a very profitable one.
All right, that's our list of 14 robotic stocks to watch.
Thanks for watching here on the BNN Bloomberg YouTube channel. TickerTech has its own YouTube channel as well. If you want to learn more, there's information in the description, and you can check out all of our investing videos.
See you next time.
How long do we do this?
That's it.